Hi, this is Joseph. It's Tuesday. It's July 14th. We're going to get started here with the pound futures. This is the daily time frame. So we had a discussion just about an hour and a half ago talking about the levels here on the pound futures that I was referring to with the weekend update. And I was bringing everyone's attention here to this. Let me go ahead and tighten this up. Again, this is a daily time frame. So we've got this uptrend line here. Starts back here from the lows of March 20th, the high here from March 9th, and it's done a really good job as far as creating this wedge-shaped pattern where everything sort of came together here at the beginning of, or I'm sorry, the end of last week and the beginning of this week. So we've got, let me open it back up again. So again, you can see the downtrend line, the uptrend line, and then we've got this resistance, this horizontal resistance level. This began the April 14th high and then the April 30th high, and you can see how it sort of all comes together right about this location here. I think this was Tuesday, Monday, and Friday. So that green candle, the bullish candle, the bar, that's Friday. There's Monday. Here we had that move to the downside on Monday. Here we had today's trading action. So far, this is the start of Wednesday's trading action here. So we're more or less trapped inside of this range, and this is the level that I was referring to. This support level right here is also the March 27th high, and that was a pretty significant high. You can see how price, it really did a good job. I mean, creating some either support or resistance along the way, and it's really had some kind of an impact throughout the last few months. For a whole week, price held below that range. And today it sort of bounced right into it and then went right back up again. And that provided me with a couple of opportunities to trade, which were very good opportunities. It was just a matter of waiting for the setup. So as it's moving through support, waiting for the reversal, that was also a decent opportunity. It was pretty obvious at that time when it was moving through that support low, based on the volume signature and a few other things that I was looking at, these indicators on the other charts that you may have seen in other videos. It was obviously a pretty good opportunity to trade some kind of a reversal and head fake to the downside and moving right back up, closing approximately where it opened. That was my estimated target initially. Of course, I'm going to scale out, and I'm not going to hold indefinitely because you never really know at the end of the day. But at this point, though, now that we've got Tuesday's candle or Tuesday's bar in the books, it's done. We know now that things are starting to really move sideways and creating. It's possible that we could see things sort of filling out to the side here, creating a consolidation. So, a few things that I normally look for example, the 5-day moving average that you see here. I'm using it as a gauge, a visual opportunity to gauge whether or not we're in some kind of trending environment, or if things are starting to flatten out and move sideways, creating consolidation. And I want to be aware of that. I want to know that. We always want to know at what stage we're in. Are we at, levels of resistance, levels of support? Are we bouncing? Are we trending? Are we moving sideways? Are we looking at either redistribution, reaccumulation? What is it? And sourcing through all of these different indicators is going to help me sort of gauge that. But right now, the more significant support and resistance levels are that March 27th high, which is this horizontal support line here, and then the April 14th high that created the resistance last week and at the beginning of this week. So the fact that price has closed, these bars are closing below the 5-day moving average, it may end up that it's more to the downside. It's possible, but I don't have enough information right now to really place a trade and start looking for short opportunities just yet. It's possible that because of these two horizontal resistance levels where price is stuck between, acting as resistance or support, it's possible that we could start moving sideways a little bit here. I'd like to see it break out. I'll certainly trade it. I'm going to be able to see that right away on a 30-minute, 5-minute, 1-hour chart during the London session with volume. But at this point, this is all that I can see. We're sort of trapped right in the middle of this range, and I want to play it carefully here. Again, this isn't an automatic sell opportunity just yet. It's starting to look bearish. These candles here, Monday's candle wasn't really that strong. Today's candle was decent, a little more as far as the volume. But again, we've got to notice how it behaved. There was the move to the downside and then an immediate reaction where it traded right back almost into the open, that's an indicator or a warning sign in itself. So let's play this carefully. If I'm going to trade it higher, again, I can't expect a whole lot out of it until it actually clears this range. But again, I'm going to do it carefully. At the end of the day, as I say just about every single day for the last few months, I think it's much better to trade on an intraday basis, execution during certain trading sessions like the London or New York session, where we're going to see more participation, more volume, more consistent movement in terms of the number of pips that price is covering, because there's just more activity. So those trades are going to be a lot more fluid. They're going to be a lot more consistent, and I can get in and out of the trades relatively quick. I don't want to get stuck holding any of these positions over the weekend, and I certainly don't want to hold them during the rollover if I don't have to. Every once in a while, obviously, you can't always detect that, and you get stuck in a trade and it starts to move sideways. You just got to manage it. That's okay. There's nothing wrong with managing a position where everything is working according to the way it should, right, based on that particular strategy or that technique. But again, I want to be in and out of some of these trades relatively quick. So that's the pound dollar. Again, at the end of the day, I want to trade it carefully, and I see that things could sort of move sideways here at this point. I want to be careful with this one. Yen futures. We're looking at Japanese yen futures. I still think that with the volume levels that we're looking at, and this is daily time frame, by the way, and the sideways consolidation, this has just been moving like this for quite some time. And while I like trading the dollar yen and I like trading the yen crosses, I'm just not really getting too many solid signals that I'm really that comfortable with. I'll probably have a few on the yen crosses this week, but again, I want to be, I want to be really choosy about these trades. Again, you don't want to hold on to some of these trades expecting some kind of a trending move when there really isn't one on the overall bigger picture here. Things are just kind of oscillating right through this horizontal resistance level, and it's just going to take some time before it clears out of this range. You can see the diminished volume print. Going to the Euro futures. Euro futures, this is the daily time frame. This one looks a little different. We've cleared. So one of the things that I do with coaching students, we spend a lot of time looking at charts and analyzing charts and doing exercises where you're trying to determine what's the next move, what's the next play, what does it look like at this point. And you can gauge a lot of that by simply knowing how to read the charts, looking for a change in character, looking for volume signatures that match to the behavior, the change that you see, or the continuation that you also see. And that is something that we want to be paying attention to here. This candle goes back to June 11th. This is the June 11th candle. We've talked about this quite a bit in the coaching sessions over the last couple of weeks. For the most part, things are sort of filling out sideways, and up until yesterday, or I should say Tuesday's close, everything was, for the most part, still trading inside of that range. Not excluding about a week and a half ago. I'm talking about more recently. Even with a pickup in volume. So at this point, we're seeing price, this bar, Tuesday's bar, closed above this downtrend line, and it's starting to close up and above some of these more significant indicators, daily indicators, that I've been looking at to try to gauge a better sense of direction. So I would expect more to the upside. Of course, we're probably likely to see some kind of a retest. You've got to always prepare for that, because that will have some kind of an impact on your stop loss. If your timing isn't right and you're using a relatively small stop loss, and you're looking at a daily time frame and you're expecting more, and then you experience a retracement, well, the trade and the direction might be right, but the stop loss may be too small to hold you into the trade. So again, that's why I'm going to take this data, looking at the daily time frames, and then moving it all down to a 30-minute, 1-hour chart and looking for opportunities there. For those of you who have asked many times, what other time frames do I look at? Yes, I do also try to pinpoint a lot of my entries on the 5-minute, and I'm also looking at 2-hour charts if I'm intraday trading. I also have some systems that allow me to trade intraday each day off the 4-hour chart. It's a system that basically it's just the most active and the most busiest block of the 12-hour cycle that we see during the week on the majors. That would be something that I would be looking for, setups on the 4-hour chart, and then of course I would switch to a smaller time frame to pinpoint my entry so that I can use a relatively small stop loss. So I would expect more to the upside. I still think that this is a pretty decent move. We'll have to pay attention to see how price reacts when it gets, if it does, back up to that March 9th high. But again, at the end of the day, I think that most of the trades, the better opportunities are going to set up during the London or the New York session. And again, off of the smaller time frames, and I'm probably going to trade it to psychological levels. I trade it to the 20, the 50, the 80, and the 00 psychological levels in most cases, unless I've got some kind of, a particular high or a range or a pocket of support or resistance, maybe a gap, something to that effect that I would be trading into to use as a target that's really obvious at that point. But for right now, I would expect just psychological levels as targets during the London and New York session. Appreciate you watching these videos. I'll send out the next update at approximately this time tomorrow.